on the map. This is Ron Costa broadcasting live from the Mappable USA studios here in Las Vegas. And folks, today we're going to really kind of bring this podcast to an investor perspective. A lot of investors are asking questions. We're going to answer some of the most important things an investor has to realize. This might be the biggest and most important podcast we have done so far. But before we get into this, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you today?
I'm doing great, Ron. I'm doing great. It's kind of cooled down a little bit in Vegas today, and we look outside and it looks like it's trying really hard to rain, but we'll see. But on the other hand, we have one of our repeat guests with us today, and like you said, we're going to do a podcast that's going to give specific information to people that are looking to do any kind of Reg A or other kind of capital raises, and so let's get started.
Absolutely. So let's bring them in. Folks, we've got Mike Brette from Small Cap Equity Advisors. Mike, how you doing over there today?
I'm doing well. Thank you for the opportunity today. I appreciate it.
Our pleasure,
Always a
Mike.
pleasure. Listen, we started off this podcast. I said this might be one of the most important podcasts we've done, and in order to do that, we have to get one of our most important guests. Right? We have to do that. We got the best. So we got you on. I'm really happy about that. Yeah. So anyway, before we get started with this podcast, I mean, you've been on the show many, many times, and I'm sure everybody who listens to the show already knows who you are. But in case there's that one person out there that hasn't listened, can we get a little bit of background on you?
Sure. Absolutely. Yeah. I've been in business almost 25 years, helping companies to put together private placements, to go public, either through reverse mergers, but lately with the Jobs Act, we've been doing a lot of Reg A plus offerings, and I help companies that are already public if they need some liquidity in the stock, if they need introductions to investment banking networks, I can do that. And prior to this lockdown that we all went through the last 15 months, I did a lot of roadshows, face-to-face roadshows with companies, where I would go to New York, take a client there, we'd have lunch, and I bring in 25 investment bankers to hear the client make a presentation. So, again, I've been doing this for 25 years. I've had my law degree for 42 years. So, I'm listed in Who's Who in the world and Who's Who in industry and finance. And I work in all sectors, whether it's real estate, cannabis, technology, you name it, I've done it.
Right,
yeah,
and I guess your specialty is just bringing people public. Yeah, it's bringing people, companies public, right? That's your main goal, though, right?
That's the main goal, yeah. Because what I always phrase private deals as dead money. Investors don't want to put money into a private deal unless there's some kind of exit strategy within at least 12 months to 16 months. They want to see a public offering so they can get a return on their money. So we're focused on public companies.
Yeah, you know how when guys like they throw away these sayings, these wise sayings, and they whatever it is, and Abraham Lincoln said that or something like that. I use the term dead money a lot, and I always say Mike Brette said that. So that's people have to be aware of this. It's a really good point, and you have to go back to some of our previous podcasts to find out what that is in detail. But today, Mike, these companies, they want to go public. A lot of them go on these portals. They're always pitching their investments, et cetera. But one thing that's common with all these is that there has to be some kind of a document, an offering document, or executive summary or something that investors have to look at, right? They don't just say, you take your word for it, right?
Yeah, no, you're absolutely right.
Yeah. So, I thought maybe today we talk about that a little bit, because we get a lot of questions from people and say, well, I'm an accredited investor, but maybe I'm not a sophisticated investor, or maybe I don't understand exactly what I'm really reading. I'm like, give it to my lawyer. He'll tell me whether it's good or not. That's not good. We need the investor to make the decision, right?
Yes. And I think this is a really good topic, because whether you're a private company or a company that's going public, if the goal is to raise money, there's only two legal ways that you can raise money. You either have to have a direct registration with the SEC, such as an S1, or or an exemption from registration, such as a Reg D or a Reg A offering. Those are the only two methods. And with either one of those, you need to have a PPM, a private placement memoranda, or a registration statement with the SEC. And those are critical disclosure documents that every investor should read and understand what's involved with the investment.
So,
okay,
Mike, well, I was going to say let's get down to brass tacks and talk about these private placement memos. Is a PPM and a public offering document, are those the same, two different names for the same document, or are they different types of documents depending on what you're doing?
Yeah, that's a good question, and they're really similar. And as a private company, again, if you're doing an exempt offering, you would have a PPM, which is a disclosure document telling the investor who you are, what you're doing, what the risks are, and what the offering's all about. With a public company, it's the same thing. You would do an offering document under Reg A, and you would file that with the SEC, and in that document, again, would be disclosure statements. The name is a little different. In other words, with a private offering, it's a PPM or private placement memoranda or prospectus. With a public company, it's a registration or exempt offering, but basically it's the same thing. It's a disclosure document for investors.
And is that just so that the investor knows what he's getting into and the company can explain what it is that they're trying to do and making things specific about who's going to do what?
Yeah, and that's a good question. A private placement memoranda, a PPM, is not a sales tool, and neither is a registration statement. They're not sales tools. They're disclosure documents, and that's a critical distinction. You don't want to, in a PPM, you don't want a lot of hype and rah-rah stuff that you would have in a sales brochure. Because, again, a PPM is not a sales tool. It's a disclosure document talking about the risk. And it's to protect the investor under the anti-fraud provisions of the 33 and 34 Securities Act. But it's also a disclosure document to protect the issuer, the company raising money, because if your attorney puts your PPM together correctly and discloses everything, it minimizes the risk that the investor will say, wait a minute, I didn't know this and I didn't know that and I didn't know it was risky and I didn't know I could lose all my money, because in the document itself, it's all spelled out. This is a risky investment. You could lose all your money. You're signing on as an accredited investor. You understand this, et cetera, et cetera. So for an investor to read that with his attorney and sign it, and you've disclosed everything, you really, as an issuer, you protect yourself from a lot of nonsense litigation. So it works both ways.
Right. So do these documents, whatever you're calling them, whatever you're doing, do they come under the jurisdiction of strictly the feds, the SEC, or are they governed by any kind of state statutes as well?
Yes, they state and federal. A lot of it is federal, but a lot of states have what they call blue sky laws that you have to comply with. That, if you're going to make an offering in a certain state, you've got to, like in California, example, if you're going to make a private offering here in California is a merit review. In other words, you have to send it to your PPM to the Department of Corporation Security Division, let them review it on the merits of the offering to make sure that it's appropriate for accredited investors here in California. Other states don't have a review. They just have a filing fee you pay for the blue sky. So it's really incumbent upon everybody trying to raise money with a public or private offering to comply with state and federal security laws when they're doing it.
So an investor, when he's looking at these documents, what And I'm sure they're not short documents. I'm sure they have many pages and many exhibits attached to them. So when he's looking at it, what provisions need to be in the document that he needs to be aware of, that if they're missing, that should send up a red flag? What are absolutely necessary?
Yeah, good question. Let's focus on private companies doing a private placement with a PPM. What investors should look for is the hype. In other words, if they're promising exceedingly high returns, and they say there's little or no risk involved with the investment, that's a red flag right there, because every kind of investment has some risk. So if they're downplaying the risk and hyping up the fantastic return, that should be a red flag right there. And when I say high return, if you're looking at a document that says they're going to pay you 6% return, or you're going to get a 6% return, that's fairly reasonable. If somebody's saying they're going to get 25 to 30% return, that's a red flag right there.
Right, and that goes for the necessary provisions, but then are there any specific disclaimers, aside from the boilerplate disclaimers that are in every document that reduces liability for whatever party? Are there specific disclaimers that they also need to look for?
Well, yes. I mean, I don't want to say boilerplate, but if you look at a number of PPMs, they typically have this, if they're prepared by a securities lawyer, and that's another point that I'll bring up. But if you look at many PPMs, they're all going to have the same type of risk disclosure, that this is a risky investment. You should have your individual attorney or advisor review it along with you. If you can't afford to lose your entire investment, you shouldn't enter into this investment. So there's certain risk disclosures that go through all standard PPMs that you look for. And the other one is, you should really look at who are the individuals making the offering, pitching the PPM to you. If it's a salesperson who's not licensed under FINRA, with a series, 6, 7, 36, or whatever the different licenses, you want to be skeptical of that, because only registered reps should be offering the investment to you. So, in other words, if you're getting a cold phone call from somebody you never heard of before, and the guy pitching the other line isn't a registered rep, that's a red flag right there. It should be somebody like a licensed investment banker, a broker-dealer, a family office that's calling you and pitching the investment to you.
And that's just like your standard due diligence that you have to do when you're dealing with any kind of an investment, is know who you're dealing with and make sure that you have the expert professional advisors, be it attorneys or CPAs or just financial advisors that are helping you to go through the process, because no one person can know everything, and what is it? 2 heads are better than one, especially when you're coming to this kind of a situation. Know what you can and make sure you know it's good.
Yeah, and with a lot of these, they have the ones that cause the biggest frauds are the ones with the aggressive sales tactics. So if you ever, attend a live event or you're getting pitched on the phone or something, and they say, this is a once-in-a-lifetime opportunity. You got to take advantage of it right now. It's going to go away in 3 days. That kind of thing. That's another red flag right there.
Yeah, for sure.
Or the terms bigger than Facebook or bigger than Google, right?
Right.
When they start throwing those things out there, that's a problem too. So Mike, let's take this from a step-by-step basis now. You got a company, right? And you want to do this PPM, you want to create it. Who creates the PPM? Is it the CEO? Is it the marketing guys? Or is it their lawyers? Or who writes the actual document?
No, it should be a securities lawyer, an SEC qualified attorney, not a divorce lawyer, not a real estate lawyer, not a business attorney, but somebody specifically that their practice is SEC work, such as preparing the offering document. Now, having said that, I know you can go on the internet and you can look up boilerplate forms, because most attorneys will charge you $15,000 to $25,000 to put a PPM together. And there's some people out there selling these templates for $200 that you can buy the software, plug in your specific information. If you're an investor and you get a document like that wasn't prepared by a securities lawyer, run from it. If the financials in that document haven't been prepared by a licensed CPA or some other licensed financial, again, run from it. That's what you should look at, is who are the people behind the offering? Who's the law firm? Who's the accounting firm? Who's the investment banking firm? If there are none of those involved in the deal and it's just some salesman pitching you on the phone, then there's something wrong with the deal.
Right. And then there's a section in the document too that calls for like the pro formas and the numbers, and they come up with these projections, et cetera. How much validity do you put in those numbers, since a lot of them are just guesses?
And that's an excellent question. My advice to people is, don't invest in anything unless there's an audit of the financial statements. Pro formas, just like you pointed out, Ron, are just guesses. They pick numbers out of the air. I mean, if they actually have an operating business with sales, and then they need to have an audit. Even if it's minimal, it should be an audit, so where there's a professional CPA firm standing behind the numbers, so that you as the investor can see how you're going to get a return at some point in time on your investment. Now, having said that, a lot of the PPMs will say you could lose all your money, there may not be a return, et cetera, but you're better off if you're dealing with thinking about making an investment in a PPM where there are audited financials. It's just more transparency. So I would stay away from anything that's just projections. And I know a lot of startups, are trying to raise money and they don't have sales or cash flow. But again, you need to take a hard and fast look at what you're investing in if you don't have audited statements.
Yeah, that's
right.
vital.
And there's also a section there where they list the principals of the deal too, your CEOs, et cetera, everybody in the company as well. So I would think that most people, if they're really interested in making an investment, they would look at these CEOs and maybe do some research on them online as well. Maybe Google them, find out what they've done in the past. You think that's a smart move?
Yeah, absolutely. Because again, you want to know, as an investor, you want to know that the management team has the experience to execute on the business model. In other words, if you're investing in an oil and gas deal and the management team has never been involved with an oil and gas deal ever, and nobody on the team, president, vice president, CEO, none of them have any oil and gas business experience, or they don't have any educational, like they're not a geologist or a petroleum engineer. Again, that's another red flag, because you want to know that the management team can actually execute on the business to at least have a chance at success. So it's really critical. And then if a licensed broker is involved in making the presentation or the pitch, you can go to the the FINRA's website and broker check, and click on that and check out the broker to make sure he doesn't have any complaints against his license, or you can find out exactly if he's been involved with some shady deals or something like that. It's always great to do your own due diligence and have your independent lawyer do the same thing.
Right, I agree.
Oh, yeah.
And then just really quickly getting back to this pro forma thing, it always reminds me of there's these online dating stories where the person looks so great in the profile, then when you meet them in real life, they're nothing like they say in the profile. So
yeah,
you got the same kind of attitude with
or they quote financials from Facebook or Google, saying, we're just like Facebook, we're just like Google, we're like
yeah.
Apple. See their financial statements, or it's we're getting involved in a $10 billion market. If we can just capture 1% of $10 billion, will be a success.
Right.
Again, those are
Right.
red flags. You should run from a deal. That's just hype.
Yeah. Vicky brought up a good point before about the PPM, the size of how many pages there are. Is that a consideration for investors? Does it make a difference whether it's 5 pages, 10 pages, 50, or 100?
Yeah, I mean, you don't really want to count the pages, but a properly prepared PPM with all the risk disclosures, plus the business model and everything, plus all the bios of the management team. Typically, they're around 75 to 100 pages in length. Now, again, you don't want to look just for weight or page numbers, but at the same time, a 5-page, 10-page, 15 or 20-page PPM is not going to be a complete PPM. And if that's what you're receiving, it probably wasn't prepared by an SEC attorney, because they're like I say, they're usually 75 to over 100 pages in length to be complete.
Yeah,
in addition, I was just going to say one other thing. In addition to the actual PPM, there's also an investor questionnaire and a suitability questionnaire that goes along with it. So that's almost another 25 or 30 pages as a document that'll be an addendum to it. So it can be quite lengthy, and I tell you, they're boring to read. I mean, they'll put you to sleep, really, but it's required.
No, exactly. And then the investor questionnaire, though, that's more of a standard thing, right? They ask the same type of questions on that, don't they?
Yeah, more or less. But the way that the rules are now, if you're doing under the Jobs Act, if you're doing a private placement under 506C, where you're allowed to advertise and promote and do seminars to attract investors, if you're doing that, you can't rely on the investor signing a suitability questionnaire that says, yes, I'm an accredited investor, and check off boxes and sign it. You can't rely on that to cover you as the issuer. You've got to take what the SEC calls reasonable steps, which you have to get copies of bank statements, brokerage statements, tax returns, a letter from the CPA, their CPA, and a letter from the attorney, all attesting that this investor is indeed an accredited investor, if you're using that code section. Other, Reg D offerings, you can have them sign a suitability questionnaire and get away with it. But under the new rules with a 506C, you cannot.
Well, that's true. The only difference is that a lot of these accredited investors, like I started the podcast off with, they may not be what you might call sophisticated investors. They may not really understand, or maybe get intimidated by some of these PPMs that they see. So if that's the case, and they look at this with a deer in the headlights, what does an investor do? Does somebody just throw their hands up and say, well, this isn't for me, or should they give that document to one, like their attorney or their accountant or somebody who might lead them with some advice?
Yes, definitely. I would tell everybody, because a PPM is a complicated legal document, disclosure document, you should always turn it over to your personal attorney to read and explain it to you. I mean, you should read it too as the investor, but don't rely on your own sophistication getting into a deal, because, again, the document can be complicated, complex, and tricky. So you want to have an extra set of eyes, like your attorney or other financial advisor, looking at it and kind of guiding you through the process. Because, beware of what you sign. I mean, because it could come back to bite you later on. Yeah, no doubt. One of the things I notice a lot is there's a trend out there for these PPMs to be marketed on a private label basis on a company's website. A lot of people aren't going to portals as they used to, so they put this stuff on their website, and they have, like you said earlier, they have the marketing page of that where they have a video, and it's a rah-rah, it's a salesy type of thing, and then they say, if you'd like more information, click the button here for the offering documents, and then when you do that, that's when you get what we've been talking about. So the question I have for you now is, when that document is delivered to the investor, does that document have to be
just, I don't know, vetted by anybody? Or like I know the portals actually look at these things and say, well, these guys are offering a 45% return. This is ridiculous. I'm not going to put this on my website, right?
Yeah, that's a good question. And the portals are supposed to, because they're supposed to be licensed broker-dealers as well to make sure everything is compliant. And they're supposed to review all the documents, the PPM. But that doesn't mean something will slip through. And what I caution people is you got to be very careful. If you, the issuer, you the company, if you're doing your own offering, in other words, you're not going through a licensed broker-dealer, or if you're just putting it up on your website and not a licensed portal, you got to be very careful because some states will classify you as an unlicensed broker-dealer, or they'll require that you register as a broker-dealer in their state or on the federal level. So it can be very complicated, when you're doing an offering. You just can't put something on your website and start going out there and raising money in all states. You got to be very careful of the blue sky rules and regulations. So,
all right. So if I download a document, an offering document from a private website versus downloading a document from a portal, right? Is there any degree of confidence I should have based on, well, this is a portal and this is a website, or is it just that doesn't make a difference? Or what do you think about that?
Yeah, to me, I wouldn't give any more credibility to a portal, even though the portals have to be SEC and FINRA approved, licensed as a broker-dealer. But I wouldn't just take that for granted that, sign off on it without reading it thoroughly or having my attorney read it thoroughly. I wouldn't give that kind of credibility to anybody. I would look at it with a jaundiced eye either way, whether it's on a private website or it comes from a portal. You need to read all the documents just to make sure, something didn't slip through the cracks and the portal overlooked it, and you're going to get stuck in the end. So, because, a lot of people on these private placements, they never materialize. I mean, the business model never takes off, and you could lose your money. They don't have any intention of going public. There's no built-in exit strategy. I mean, I've been doing this over 25 years. I've got a safe full of stock certificates that I invested in private companies that's just fancy wallpaper. And I knew what I was getting into at the time. So, but you just have to be careful. And that's why today, or for the last almost 10 years, my firm we've focused only on publicly traded companies that we take public or we get involved that are already trading because of the liquidity that's built in. So you got to do your own due diligence.
Well, let me ask you this. Let me ask you this, Mike. Once you've gone through the paperwork, you've analyzed it, you've done your due diligence, and you make that choice, and you say, okay, I think I'll invest my money in this. So now, is there an additional document, or does the placement document have the provisions of what's going to happen once you exchange money? Do you have to enter into a new agreement about what the terms and conditions are of, okay, here's my money, and what are you going to do, and what am I going to do, or is that part of the original document?
Yeah, that should be in a properly prepared PPM. That should all be outlined in there, especially on the facing page. The first page of it should say, the name of the company, we're selling common stock, we're giving you a 5% coupon rate or whatever it happens to be. The terms should all be spelled out in the document so that when you as the investor sign off on it and give them your money, that's the only document you're going to receive. And that should tell you what you're putting your money into, describe the business, the deal, the terms, the conditions, and everything. It's in that one document.
Yeah, so, that's good. Because I was thinking that once you made the choice, that now you've got to go through another document to understand what you're doing with your money and what they're doing for you. But having everything spelled out in the original document, it's a little bit more reassuring.
Yeah, no, that's correct.
Okay, and the last part of this is the exit strategy on these too. They should spell out the exit strategy on the PPM offering document as well, right?
Yes, even though they can't give any guarantee, and this is another thing, if any PPM guarantees you anything, like a return, or guaranteed you can't lose your money, or guaranteed we're going to be bought out, or guaranteed we're going to go public, again, run from it, because there are no guarantees. So, they can state in the document that our ultimate goal within 3 years or 4 years or whatever is to be acquired by a larger company in this space, or we plan on doing a formal S1 registration with the SEC to go public, but that's not assured. They can't give a guarantee, but they can allude to that and say that is a long-term plan. But again, that may or may not happen.
Everything's a risk.
Yeah, along those lines, is there an expiration date on these documents?
Yeah, usually 12 months. They can't when it's prepared. It says this offering will expire on such and such a date. It actually gives a date, a month and a year. So, and again, this all goes back to the quality of your SEC counsel that prepared the document, as opposed to it being prepared by the company themselves using some kind of boilerplate software package that they buy for a couple $100.
Wow.
Let me make one comment about that too, and a lot of people don't realize this. If you prepare the PPM yourself, you buy a software for $200-$300, and you plug things in. A broker dealer, investment bank, investment professionals cannot get involved with that offering. So if you're trying to solicit money from investment banks and things with your own PPM, the compliance department of those investment banks and broker dealers and family offices won't allow their reps to get involved with a document that wasn't prepared by outside SEC counsel. So you're slitting your own throat by saying, well, I'm not going to pay $20,000 for a law firm to prepare this one. I can do it for $200. Well, you're cutting your own throat because investment banks can't get involved in the deal. So you're not really saving anything. So
wouldn't you be fully liable if you used a template off of the internet to do your document? Doesn't that put all the liability back on you? So that's even crazier.
Yeah, and then if you're not around the company, because a lot of these companies go out of business. So if that's that's why the investment banks and the licensed broker dealers compliance department won't allow their reps to get involved with a deal that wasn't prepared by an SEC attorney, because they know the firm could skip, the issuer could skip out with the money, go bankrupt or whatever, and there's no alternative then for the broker, and they put their license on the line and they can't go after anybody. At least with a well-known SEC attorney or a law firm, they have recourse against that firm if something went wrong and it's the fault of the law firm. They can go after the law firm, malpractice, and collect.
Yeah, if you want to paint your house, you can go and buy the paint and a brush. But if you want to invest your money, do it right. It's not a do-it-yourself project.
That's what I tell. That's what I tell everybody. That's what professionals are for. I don't even get on a ladder, to clean out spouting anymore. That's what professionals are for. I'm not climbing up on a ladder and fall off. No. It's not worth it. I'll pay somebody a couple $100 to clean out the gutter. And that's their job. Same thing with painting the house. Yeah, Vicki, I could go buy the brushes and the paint and everything. I'm not going to paint. No way.
And when it comes to investing, don't even contemplate it. Stay away from those internet sites that offer you cheap templates that are going to stab you in the back in the end. Yeah, I mean, it really serves no purpose. But again, it's an education for some people. They learn the hard way.
They do, and you know what? This is the thing that we talk about all the time. I hope that there are a lot of investors listening to this podcast, because this is an education that they're not going to get anywhere. We might have saved people hundreds of thousands of dollars in getting taken by some bad PPMs. So I hope that they're listening. I hope the issuers out there understand the importance of that, and maybe even know to contact you Mike, about doing this the right way. So how would they do that? What's the best way to get a hold of you?
Yeah, they can go to LinkedIn and look up my name, Michael Brette, and get my profile. They can email me at Mike Brette, BRETTE @gmail.com, or they could call me directly. I always take their calls, 951-236-8473.
All right. And Vicki, am I right? Is there a college course out there on what to look for in offering documents? I don't think there is.
No, not that I'm aware of, unless you go to law school.
I think it would be real short. Call the expert.
Yeah. Yeah, and again, it's something that investors need to know. So,
absolutely.
So what do you think, Vicki?
Well, it's what we always say, Ron. We absolutely got the topic right, and it's what we always say. The reason we do these podcasts is to give our listeners information from the absolute experts that are out there. Our guests are always the top of the cream of the crop in what they do, and the information we give is always right, spot on for what you want to do. There's a lot of people in this world that would rather scam you than do a good thing for you. And if you don't have the right people working for you, the right professionals, the right experts to help you, the bad people are going to come in and take advantage of you. And we do not want that to happen. That's why we have guests like Mike on, so that we can give you that information and we can help you do what's right. Great. I love doing this. I love telling people how to do things the right way with the right people, and we have the best guests on our podcast to do that. And Mike is one of them.
We certainly do. Yes, absolutely. So, Mike, again, thanks a lot for being a guest on the show today. Appreciate it, as Vicki said. Yep, and we'll do more of these, and we hope to get you on over and over again because
look forward to it.
Thanks. When you're on there. Yeah, absolutely. Okay, and Vicki, thanks for co-hosting. Folks, you're listening to the Mappable USA podcast at MappableUSA.com. If you just go to that website, scroll down, you'll see all our syndication sources. Pick the one you like best. Subscribe, and you'll never miss another one of our episodes. If you want to be a guest on the show like Mike was today, there's a guest tab there. Fill that out. See what you can do about getting you on the show. And if you like what you heard today, send us an email at info@MappableUSA.com, or just leave a comment on whatever page you're listening to this on right now. So thanks for listening. Thanks for your support. We'll be at you next time with another Mappable USA podcast. Have a great week, everyone.